everyone, my name is Afreen Asmat and welcome to today's session. So today's topic of discussion is Unit 5, that is operational aspects of deposit account. So we are going to discuss this chapter in two parts. So today is part 1, then we will be going to discuss the rest of the chapter in the part 2. Let's start discussing. Let's start with the very first thing, that is what is current account. First of all, what is current account? So current account, always you know that it is meant for those individuals which are involved in day-to-day business transaction. So to carry out the day-to-day business transaction, to carry out the business activities and the operational needs, and to park on their surplus or operational funds, there is an account which is known as current account. And the most important thing, no interest is actually paid on the current account. A current account cannot be opened by whom? So current account cannot be opened by a minor person. Okay, however, if the account of the minor, they can be opened and operated by the natural guardian. So the current account facility is actually not given to the minor person on its own, but if the minor have the need to open the current account, then their account is actually managed by the natural guardian. Pardanasheen woman means a woman who is completely in whale. Okay, so that Pardanasheen woman is not allowed to have a current account. Illiterate person as well as a blind person. So these are the persons who are exempted from the eligibility of the current account. Next, if we talk about the current account, there is no restriction on the withdrawal and deposits in this amount. Next, if we talk about saving bank account, very simple. Saving bank account is meant for those individual or college going students or anyone who want to inculcate some saving habit in themselves. So provide the saving habit to inculcate some saving habit, that is an account which is known as the saving account. Saving bank account can be opened with check facility and without check facility. So both ways are available. You can open this with check and without check also. Deposit can be in cash, by check, and through electronic transfer. And always remember, interest is payable in the saving bank account. No interest is payable in current account, whereas interest is payable in the saving account. Now, banks are free to decide the minimum age to which they allow the minor to operate the and handle the saving account independently. First, first of all, always remember, bank can allow the minor who can have the age of 10 years and above, they can operate the account independently. But there are also that some banks have their own ages to which they allow the minor to operate their saving account independently. Now, banks are allowed to fix the interest rate on the saving account also. But there are obviously some restrictions. First restriction is, first, every bank to offer a uniform interest rate on saving account deposit up to 1 lakh, irrespective of the amount in this account. So, first, there is a first restriction that every bank has to offer the same interest rate for the amount of rupees 1 lakh, means for the deposit of rupees 1 lakh in the saving account. So for this deposit, that is up to rupees 1 lakh, every bank has to charge a uniform interest rate. Second, if we talk about the saving bank who has the deposit of over 1 lakh, then banks are free to decide the interest rate. So if you have a deposit of below 1 lakh, then obviously all bank have to charge a same interest rate. But if there is a deposit that is above 1 lakh, then the bank are free to decide that whatever interest they want to charge. Okay, next. If we talk about the eligibility to open a saving account, first of all, individual can open it in the single name or joint name. Minor who has age above 10 years can open and operate the saving account independently, whereas some banks are free to decide the higher age also. The Karta of Hindu undivided family is also eligible for having the saving account. Entities of the category for which RBI has given general permission. So whatever the entities to which RBI has given the general permission can open the saving account. Okay, remember? Okay, next. If we talk about the basic saving bank deposit account. So basic saving bank deposit account is a version of saving account, but it is different from saving account. It is like a saving account, but it has obviously some difference with the saving account. So first of all, this account is made available by bank to inculcate or to facilitate the financial inclusion. Financial inclusion means to connect maximum people to the financial economy, to the financial as well as economic aspect of the country, especially those people who are economically background. So to connect each and every individual to the banking system, there is a financial inclusion activity that is known as basic saving bank deposit account. Now, in this, various free services are given by the bank. For example, you can have the free cash deposit, ATMs, electronic money transfer. These all facilities are free in this basic saving bank deposit account. Okay. Next, there is no limit on the number of value deposit in a month in a basic saving bank deposit account. A minimum of 4 withdrawals per month is allowed, including ATM withdrawals. So you can deposit how much money you can, but a minimum, minimum of 4 withdrawal is actually allowed in a month, which includes the ATM withdrawal also. If we are talking about bank can offer additional value added services to this account also, but this is completely option, means the customer should have the option to reject that if they don't want. So bank can provide the value added services, but this is optional. It is up to customer that whether they want to accept or whether they want to reject. Clear? Okay, next. What are the features of the basic saving bank deposit account? First of all, the very important feature, no minimum balance required in this account. Second, each individual can only have one account. So basic saving bank deposit account, every individual can have only one account, whereas in saving account, individual can have how many accounts they have. Okay, holder of this account will not be eligible to open any other saving bank account. So if you are a holder of basic saving bank deposit account, you are not allowed to open or hold any saving account in banks. Existing saving account should be closed within 30 days of opening this account. If you have opened this account, your other saving bank deposit account should be closed within 30 days of opening this account. Customers are allowed to have other type of deposit along with this account. Means that this account is not simultaneously go with the saving account, but it can go with the other deposits also. You can have term deposit, but you cannot have a saving bank account. Clear? Okay. Now next, fixed deposit. Now what is FD, fixed deposit? So fixed deposit attract a highest number of interest rate or highest interest rate in comparison to saving and current account, because current account there is no interest, saving account there is less interest, and FD they have the high interest rate. So these are the deposit which are for especially a specified period of time. This is for what? This is for a specific period of time. The minimum time period for FD is 7 days and the maximum time period is 120. So there is a minimum time period and there is a maximum time period. So FD of 3 crore and above, in the case of scheduled commercial bank and small finance bank, and those 15 lakh and above in case of RRB, is considered as bulk deposit. So what are bulk deposit? So in case of the scheduled commercial bank and small finance bank, if you have an FD that amounts of rupees 3 crore and above, and in case of RRB, if you have an FD of 15 lakhs and above, these are considered as a bulk deposit by RBI. Bank can offer term deposit without premature withdrawal option also. So it is up to the bank. Bank can offer this fixed deposit facility without the premature withdrawal of this FD. But in case of a bulk deposit, bank has to give this option of premature withdrawal. So in case of bulk withdrawal, bulk deposit, the bank should give the premature withdrawal facility, but in other cases, it is up to the bank. They may allow for the premature withdrawal, or they may not allow with the premature withdrawal. Clear? Okay. Next, if we are talking about the recurring deposit. Now, what is recurring deposit? Recurring means the repetitive deposit. In this deposit, you don't have to submit a fixed amount for a particular period of time. In this recurring deposit, time period is decided and you have submit the installment of money for that time period. Means, for example, you are monthly giving some money in the recurring deposit. You are annually giving some money in the recurring deposit. So in this, actually the principal amount is not given at once at lump sum. No, in this the principal amount is actually given in installments, you can say, or in parts. That is known as a recurring deposit. So these deposits are in the nature of fixed amount that is paid by the depositor every month for a predetermined time. So there is a predetermined period and the depositor can deposit the amount on a monthly basis to this recurring deposit. The maturity amount is arrived then is based on the cumulative amount to be deposited on the due date over the period of time, plus interest on compounding at quarterly rate. So the whatever the maturity amount is, the maturity amount is obviously the principal amount of the complete time period you have deposited plus the interest rate, and the interest rate are calculated on the compounding interest rate on a quarterly basis. So this is the complete maturity amount which is disbursed after a certain time period. Now, no recurring deposit is accepted in the FCNRB account. So there is an FCNRB account scheme which we will be discussed in the next unit. Okay, so this account does not offer the recurring deposit. Clear? Okay, now next, if we talk about the annuity deposit is actually the reverse of the recurring deposit. So in recurring deposit, the lender is actually what the person is actually depositing money every month to the recurring deposit. That is principal amount. But if we talk about the annuity deposit is the principal amount plus the interest. This is actually paid you periodically. This is actually not given by the bank at once or in a lump sum amount. If you are depositing money, that is known as the recurring deposit. And if the bank is giving you the amount of your deposit periodically, say month or in a 6 month or quarterly or in a yearly basis, the bank is providing you the FD amount, the deposit amount in a periodic manner. Means every month you are eligible to get some amount, or every year or every 6 months. This is known as the annuity deposit. So it is a reverse of RD. Principal amount is written to the customer in periodical. You can say it is can be monthly, quarterly, yearly, half yearly, anything over the tenure of the deposit. For example, the annuity deposit for 5 years with a quarterly installment, the customer will receive 20 quarterly payment of equal amount. So 5 year, this annuity deposit, this is an example, like this is annuity deposit for a period of 5 years, means the bank is giving you what? The bank is giving you the deposit amount, the principal amount in 5 years, and every years you will receive this in a quarterly basis. This is known as the annuity deposit. So reverse deposit or recurring deposit or annuity deposit. Recurring deposit, when you are depositing money in your deposit or a term deposit, and this is actually periodically. You are actually deposit money monthly or 6 monthly, and the interests are actually calculated on a quarterly basis on a compounding interest rate. And when there is a reverse of this recurring deposit, this is known as the annuity deposit. It means that the customer is paid, or the bank is giving to the customer the principal amount which they have paid in a periodic manner, say monthly or half yearly or quarterly or yearly. Okay, then this is known as the annuity deposit. Okay, I hope that you have all understood this. Next, certificate of deposit. Very simple. Certificate of deposit is a short term negotiable instrument, and this is a money market instrument. These certificate of deposit can be issued by the commercial bank, that be issued by the small finance bank, anyone. Okay, now they can be issued in the dematerialized form, means in an electronic form, which have a denomination of 5 lakh with a minimum of 5 lakh. Okay, so if you want to invest in a certificate of deposit, this is actually offered by the scheduled bank. This is actually offered by the small finance bank. So if the customer want to invest in certificate of deposit, they can buy the certificate of deposit from the scheduled bank or the commercial bank, but the amount, the minimum amount that to be invested in the certificate of deposit is 5 lakh, and it can be invested in a multiples of 5 lakh, means 5 lakh, 10 lakh, 50 lakh, 20 lakh, 25 lakh, 30 lakh, 35 lakhs, 40 lakh, in this way. Okay, now the minimum tenure of the certificate of deposit is 7 days and the maximum is 1 year, and that's why it is a part of money market instrument, because money market instrument is the that instrument which actually deals with those financial instruments which have a maturity of 1 year and less. Okay, now next, if we talk about the interest rate in this certificate of deposit, it can be fixed and floating, and it can be specified by FIMDA, Fixed Income Money Market and Derivative Association of India, and these are traded in the secondary market. So this is known as certificate of deposit. It is nothing but an investment opportunity for the investor. So banks are issuing you the certificate of deposit. You can invest in this certificate of deposit with a minimum of 5 lakh in a multiple of 5 lakh, and bank is providing you the interest either on fixed or floating, that is decided by the FIMDA, and you will obviously get the your paid amount or your maturity amount after the maturity, plus you will earn the interest on the same certificate of deposit or the clear. Okay, next, if we are talking about the interest rate, see, domestic current accounts. First of all, in current account, no interest is being paid. In current account, no interest is being paid. Okay. On the balance of the current account of the individual or proprietorship, interest should be paid from the date of death. So, in case there is a death of the individual who is actually managing the current account, the interest is paid on that name from the date of the death of the individual till the date of the repayment. Means if their death date is this, and now the balance is to be repaid to their legal heir. So from the date of the death till the balance is repaid to the legal heir. So this time period interest is provided on the current account, else no interest is provided in the current account. Okay. Next, interest on the saving account. So obviously, I have told you that bank are free to decide the interest rate on the saving account. Okay, but with the option, first of all, if the deposit is 1 lakh and below, then the bank should charge a uniform interest rate for all. All banks should charge the uniform interest rate for all its customers. And if the deposit is above 1 lakh, now banks are free to decide the interest rate on their. Okay, so bank are permitted to pay the interest at differential rate if the amount is above 1 lakh, but if the balance is up to 1 lakh, it should be uniform. The interest should be credited at quarterly or shorter interval as per the bank policy. So bank can decide whether to credit that interest annually or half yearly or quarterly. Okay, done. Next, if we talk about the interest on deposit term, means fixed deposit, FDs. So first of all, they can vary. Okay, so the term deposit, the time period is minimum 7 days, and they can offer different interest rate for different period. So it depends upon the period also. For example, you are taking an FD for 1 year, 2 year, 3 year, 4 year. It depends upon this also. And it depends upon the bulk deposit also. Bulk deposit, I have told you that if you are having an FD or deposit in a scheduled commercial bank or a small finance bank and the amount is 3 crore and above, then this is a bulk deposit. And if it is below, in the case of RRB, if it is 15 lakh and above, then it is a bulk deposit. So how much money you are depositing, whether it is bulk or not, and for what time period, these two are the main factor to decide the interest rate in the domestic term deposit. Okay, no interest shall be paid if there is a premature withdrawal, that is before 7 days. Means if you have an FD and you just have a premature withdrawal before 7 days, then no interest is given to you on that maturity. Okay, so this is the interest on domestic term account. So this is the complete part one. I hope that you have enjoyed this part one. Then I am completing this complete unit in part two. Okay. Thank you so much, guys. Just keep on giving feedback and rating to the session. Thank you. Take care, everyone. Bye bye, guys. Take care, everyone. Bye.